Welcome to The Explainer. Today we are diving into a market that's sending some seriously mixed signals. We've got a huge verdict for a crypto giant, some pretty clear signs of waning confidence, and a potential ETF surprise that's got everyone guessing.
All right, let's start with the story that's really sending some shockwaves through the whole crypto investment community.
MicroStrategy, you know them, one of the biggest corporate champions of Bitcoin, has just been slapped with a credit rating that puts its entire financial strategy right under the microscope.
So S&P Global gave MicroStrategy a BB- rating. Now, that's 6 levels below what you'd call investment grade. So what does that actually mean? Well, it's considered junk. It's a signal that there's a high risk the company might really struggle to pay back its debts. And the reasoning behind this is, frankly, pretty fascinating. As you can see, S&P pointed directly to the company's massive, all-in bet on Bitcoin. They also flagged its super narrow business focus and, maybe most importantly, serious concerns about its ability to actually service its debt with plain old US dollars. And listen, those obligations are huge. We're talking around $15 billion in debt and other instruments they use to fund that Bitcoin shopping spree. It's that level of exposure that really has S&P worried. So here's the real kicker. MicroStrategy's long-held dream of joining the prestigious S&P 500 index, well, that's now likely impossible. This rating is a massive blow to that strategy because, simply put, no company in that index has a rating this low.
Of course, in response, founder Michael Saylor tried to put a positive spin on it. He framed the whole thing as a historic first for a company with a Bitcoin-centric treasury.
But this news, it doesn't exist in a vacuum. Actually, it might be part of a much bigger trend, because recent data suggests a real cooling of corporate enthusiasm for crypto.
And this leads us to a really critical question. After a period of just gobbling up crypto, are other public companies starting to get cold feet?
And wow, this chart from Coinbase, it really illustrates the trend perfectly. It shows that ever since the market took a nosedive back in early October, corporate buying of Bitcoin and Ether has just fallen off a cliff. According to Coinbase, this isn't just a blip on the radar. It's a clear signal of caution. The same sector that was so aggressively accumulating digital assets is now hitting the brakes, especially as the value of their holdings has gone down.
But just as that whole cautionary tale seems to be setting in, we get a complete surprise, a counter-signal, a potentially bullish development on the horizon for some other major cryptocurrencies.
According to a Bloomberg analyst, exchange listings have just suddenly appeared for new ETFs tracking Solana and Litecoin, with a launch maybe even planned for today. This could even include a conversion of the Grayscale Solana Trust, which would be a huge deal, kind of like what happened with Bitcoin.
Okay, but hold on, there is a major catch here. It's really unclear if these are the real deal, the fully-fledged SEC-approved spot ETFs that everyone's been waiting for. Without any official SEC paperwork, they could be a more limited product with a murky regulatory status, which might scare off big institutional money.
So the big question is, what is going on here? Is this some kind of regulatory loophole, like maybe a missed deadline forced an automatic approval? Or is this just a false start, a premature announcement that got way ahead of itself?
To get the full context for all this crypto action today, let's zoom out for a second and take a quick look at the broader market movements.
U.S. stocks saw a nice rally. The S&P 500 actually hit a new record high, mostly driven by big tech. But the small-cap stocks didn't get the same memo. They lagged pretty far behind.
Gold had a dramatic day. Prices absolutely plummeted to test that $4,000 level, which is a major technical support zone for the precious metal. Now, over in the crypto ETF world, Bitcoin funds saw a pretty healthy inflow of about $150 million. But what's really fascinating is that the buying was super concentrated. Just 2 firms, ARK and BlackRock, were driving almost all of that activity. And then you look at Ethereum, and it's a completely different story. The ETFs brought in a similar amount, about $134 million, but the participation was way broader, spread out across a bunch of different issuers. It really suggests a different kind of investment appetite.
And finally, a quick look at other key assets shows a pretty mixed picture. The 10-year Treasury yield held steady at 4%, oil prices were stable, but a weakening dollar suggests a growing appetite for risk among some investors, which is interesting given all the cautionary signals we just talked about.
And that wraps up our main stories for today. If you want even more breaking news, real-time charts, and analysis on both crypto and traditional markets, be sure to check out our Telegram channel. The link is right there for you in the description. That's your Daily Edge. See you tomorrow.